Teamwork makes the dream work.
So
And
now,
then so after it'll record, and then after the meeting, it'll probably take like 5 minutes to process the whole thing, and
gotcha.
then you can just drop it right in that Google Drive.
Cool. So I think it's overall important, like to break down a chart. I think it's important to have your monthly levels, right? So
Mm-hmm.
top-down analysis, your monthly support and resistance, and then your weeklies. So you have strong prices that the market's going to react around. Um, and then what we're talking about here is a three-step kind of like process and really deciphering what the market's doing. And step one is ninja. It's the market sentiment. It's what the market's doing. Like we're going to be looking for like drawing some channels or trend lines or any type of pattern as far as triangle pattern, things of that nature. Number two is Astro. We're going to really, once we see the overall market sentiment and what we're going to be looking at, then the technicals and the confluences are going to come to play. What are the candlestick reversal patterns going on, the trend lines, how it's reacting to the moving averages, things of that nature, and then the entries when we go down to the lower time frames and really snipe the hell out of it. So on UJ, there was a good example earlier, right? UJ, from this point of view, right, the 4 hour looks like it's just kind of consolidating, and this monthly support is holding true right now. It's a pretty strong level. Had the
Mm-hmm.
previous three rejections all fit. So step one, I'm gonna get this back. Step one is the ninja. Whoever decides wants it. All right. So the ninja overall market sentiment. So what we could see here is a nice little channel, right?
Mm-hmm.
Nice little channel to the downside, just descending trend line, and then could just make it fit. See if this extends up a bit.
Mm-hmm.
So descending channel. So we know that this is a, oh good, here it is. So right now in this example, we're in a descending channel. So bears are in control. And what are we doing? We're looking for sells. So then when we look for sells, what are the confluences? MA crossover is a big one. Counter trend line break is another big one. And then reversal patterns, bearish variations. So that's just a side note. So step one, ninja, the market sentiment. We see that on this hour chart, it's a descending channel. It's making lower lows and then lower highs. And it's kind of just riding this wave here. It's nice and fluid. If you see the moving averages, like the moving averages are just flowing with this channel. So it's fluid. So we
Mm-hmm.
obviously want to go in the direction of the fluidity. So that's one ninja, it's the market sentiment. I think it's smart too, just to write down the swing points. Just
Mm-hmm.
that. Right. So I'm just gonna mark this off here. And then there's gonna be, like in this example, there's gonna be dynamic areas for entry. And those dynamic areas are on the trend line here. So I'm gonna make these a slightly different color because that's when the price is, if it holds true to this channel, it's gonna really be the most explosive. I think having your chart nice and clean and having kind of color coding it like this, like these are nice
Mm-hmm.
areas here because it's actually touching the channel, right? And we're kind of
Right.
expecting the price to go there. So this is also a dynamic area, but like what is it going to do? Is it going to respect it or is it going to break it? So the ninja is the market sentiment, right? And then when Astro comes into play, it's a technicals, the confluences. If you notice, every time there was a trend line that was broken, what happened? Trend line broke, moving average crossover, dropped. Same thing happened again, came up, moving average crossover, break a trend line, boom, dropped. Third, draw a trend line here. There's a previous support here. This wick here, I mean, we really got to look for, because if you look at it, this area here was a little support. So we just got to be mindful of that. But I think what's smart to put in is going back to supply and demand zones, right? From a low point, you take this bearish candle from the bottom of the wick to the top of the body. This creates a zone here, and a lot of times price will come back and hit that zone before dropping. So if we do the same thing on the recent lower low here, dynamic area here. So we're looking for what? We're looking for sells in this market. And we want to take the sells around dynamic areas. So these trend lines, these blue bubbles here is where we want to take these sells in this direction. So now it's coming right back up to the zone, and it respected the zone. So now we need further confirmation where this trend line we can get rid of. We want a break of a trend line, counter trend line. We want the moving averages to cross over in some type of bearish variation, whether it's a bearish engulfing, whether it's a 3-pin pattern, whether it's just anything showing that the bears are back in control. And then when we go to the entries, let me take all this out and we'll go to step 3. So step 1 was the ninja, the market sentiment, right? This is a descending channel. Step 2 is Astro. We're going to look at the pivot points, right? We're going to look at the trend, the higher highs and higher lows, lower highs, lower lows. Technicals, the confluences as far as the trend lines, the moving average crossover, and then the break, right? So now let's look at entries, right? So this is the first time that price came back up to this descending channel in this dynamic zone on the actual trend line. So let's decipher this out here and look for an entry. This is the hour chart, so let's go to the 15, see if we see anything clear here. All right, so we're in the descending channel. You see clear now here too. All right, so right here we'll do bar replay. And we'll let the market play out. So now you're going to start to see this descending channel form.
And so, boom, you get it hit at the top there, hit at the bottom, consolidation, retracement.
All right, coming down. So now this is a bearish market right now, right? Well, we know that now is a bearish market, but we're looking for breaks of counter trend lines. Like this is key. Like seeing breaks of things like this down, and then we want to see this repetitively. If this is going to be, which we know now, a bearish descending channel, these are key for entries. So let's get to this point. So what you see here, which is pretty cool. You could trade the actual channel where This is a nice little break of structure here. This bullish candle,
Mm-hmm.
crossover, a huge bullish candle. It broke this previous resistance, and it drives upward. All right. So boom. So now it touched the second point of this descending channel here. So let it play out. And right now, what we're looking at right now is here's a high, here's a low, here's a lower high, lower low. Now here's a new lower high.
Mm-hmm.
Now we're expecting, once a lower high is formed, on top of this channel, it's respecting this channel, and it's a new lower high. Once a lower high is formed, we're expecting what? A lower low. So we're expecting price to essentially break this level, even if it's by a micro of a pip. The markets are very intelligent, even if it's like just down. But what's our projection for a descending channel? It's literally the channel itself. That's what we want to look for. So in a situation like this, what do? We draw our trend line, because history repeats itself, similar to right here. We're going to draw a counter trend line. That just makes sense. That's fair.
Mm-hmm.
So now what we're looking for in this scenario
MA break, MA cross, right?
influences for entries. So we have the general bias of the trend we know, because the descending channel is bearish.
Mm-hmm.
So we're looking for sells. So right now we're at a dynamic area of support. Sorry, resistance. It's on the channel. So this is a super strong level that we could really catch, the trend here. So what we're looking for is, like you were saying, Morgan, it was a cross of the moving averages, break of counter trend line, some type of bearish variation, or break a structure. So these are three we're looking for right now in this example, right? Because it's a bearish channel, right? It's a descending channel. We're looking for sells. So cross of the moving average. So right now, the moving averages are still up. So this is a dynamic area. So let's see how it plays out. Right. So right now, I think it's safe to say like this is definitely a recent area of support, just to keep in mind.
Mm-hmm.
But we want a break of the counter trend line. Come right back up. Let's see if it actually goes above this previous high here. This is technically a lower high on like a 15-minute chart.
Mm-hmm.
Market's slowing down, comes back up.
Is that a trend line of touch?
Yeah. And
boom, there's your break of, there's your MA break.
This is it. So what happened here? Counter trend line break, moving average crossover. Right here, the moving average is crossover.
Mm-hmm.
And this
you have it engulfing.
Was broken. So now,
right,
we enter the market. Right. A safe bet is you take the high right here. It's 13 pips away. and you have like 10 pip stop loss, 10 to 15 to 20, depends on the style. But this is only a 15-minute chart. This is based on an hour descending channel, so it doesn't have to be a crazy big stop loss. I would put it like 5 pips above here just to be safe.
Mm-hmm.
Right.
That's perfect anyway, because Q always says accurate for, especially for UJ, accurate drawdowns like 20, 25 pips.
Yeah, and like we need the market to breathe. Like we're not
right.
As human beings, like we're not going to know the exact time to enter a trade. We just need to know the overall market sentiment and allow the trade to breathe.
Mm-hmm.
And then the target would be like the channel. The target would be the channel here. So
mm-hmm.
we enter here. So what do we do here is now we take a screenshot because journaling is really important. So what we're going to do is we'll take a screenshot. So if you see here, this is my screenshot. So what I would do, what's up, Morgan? So what I would do here is I would open up my journal. I think it's open already, actually. Oh, there it is. And we write why we took the trade. And a lot of times I'll put it like in my actual analysis. Here, so we'll insert a new section. So basically, definitely not the smoothest of processes, but
it's all good.
Take the picture, put it in your journal, the date, why you took the trade, blah, blah, blah.
Mm-hmm.
So what happened here? Hour one, descending channel, drop to M15, had multiple confluences. We had MA crossover.
Mm-hmm.
We had a counter trend line break. We also had a break of prior support.
Mm-hmm.
Prior support here, and it was off a dynamic, off a dynamic level of resistance, which in this case was the actual channel itself. So our risk reward here is 1 to 2.8. So we're risking 18.8 pips to gain 52.7 pips. So essentially, this is something that you would do, and you do it before, and then you would let the trade play out. And like right now, you're looking good.
Oh, baby.
Like to the T.
Yep.
So like a take profit, which is a really good thing to know too. One good take profit, if you don't want to be as bold to get down to this channel here, points of a trend line are great take profits, right? Especially if this is a bigger time frame and it's a bigger trend line. These are money. Like this is a 15-minute chart, so it's not going to be crazy amount of pips, but you could consider points of the trend line to be take profits essentially, or in your head at least take profits so you can monitor your trade. So what happened? This trade did in fact come through, gain of 52 pips. And why? What do we do? We understood the market. We drew a channel. We knew this was a downward channel. We knew it was making lower highs and lower lows. So we just followed that. We drew some trend lines connecting, and we capitalized on this descending channel for 52 pips. So.
Mm-hmm. And actually, it looks like we just may get another setup here, depending on what happens with the rest of this hour candle. But Obviously it popped out of that channel a good bit, but in the grand scheme of things, it stayed in that supply and demand zone that Mike talked about previously. If you look all the way to your left, where that exactly right where that trend, that counter trend line began, boom, right there. So it respects the supply and demand zone, and the wick is just another way of saying there's buyer's exhaustion right there. So you can hopefully expect to see this next H1 candle come back down, tuck itself right back into the channel, and then we're just going to repeat the same exact process that we just ran through. Waiting for the MA crossover, waiting for the break of the counter trend line, and then waiting for a break actually of that like mini little support, which would give us the same amount of confluence that we just had. And then you go follow the same exact entry procedure. And I mean, we're forever in profit. Something to definitely keep in mind is that blue monthly support zone that Mike has highlighted, because obviously monthly and weekly support and resistance are the strongest form of support and resistance. But with where price is right now, we could still squeeze out a solid amount of pips before it even gets near that zone. And you can see from the past, right at the beginning of that counter trend line that we're just looking at now, it really respected that monthly support, bounced right off it. So even in between that blue zone and where price is now, we could still probably squeeze out a good bit of pips. And that's the name of the game. It's not really don't trade for profit, trade for a move. And there's still room for this market to move. So we're going to try and squeeze everything we can out of it. But this is something that actually we can watch throughout the course of the rest of the day and then upload another video based on what we see. And hopefully these things will start to compound and stack on top of each other, and we can really, build a foundation and just keep moving along.
Right, and that was well said, Morgan. Because this monthly support here, it's a very strong support. So maybe the fact that we're at a monthly support, in the back of your mind, you could think, all right, well, I won't be mad if price breaks above this channel for
Right.
the upside, based on the higher time frames, because it's always top-down analysis. You always want to see the market from with what's happening on the weekly, the daily, the 4-hour. But just because that this was an hour one setup, we were able to get hour one results. Nice 50 pip move because we took it on the top of the channel. Whereas if this was a 4-hour chart, for example, the pips might be more in a situation like this. But we're not going to stay in the market for an extended period of time when our setup is only on 1 hour. Because 1 hour, there's 24 of these in a day, right? So it's basically giving 24 opportunities for something like this to happen. So the likelihood of us being in a trade all day based on our chart may not be as high as if you're on a 4-hour chart. So always know what market you're in and what structure you're in. Like, what time frame are you analyzing on? The lower the time frame, the lower the expected time that you're going to be in a trade. The higher the time frame, the higher the expected time that you're going to be in a trade. If that makes sense.
Mm-hmm. 100%.
Cool beans. All right. Well, good stuff.
Very good stuff. And then obviously, whenever this trade plays out, you would put the before and after right in your trading journal. And then all it is just refining, reviewing and refining.
Yep. So in this here, whatever it is, you make it obviously look neat, make it look pretty, but essentially what happened came through. Trade came through. All right. What we saw, descending channel, to recap, hit the top of the trend line of the descending channel, dynamic area of resistance, came up. We waited for the moving average crossover and a break of a counter trend line. Once those two were confirmed, and also a break of the previous recent support here, that just showed that sellers in this moment of time were in control. There's more of them. So it was a perfect opportunity based on where we were on the hour trend to take the sell, and it worked out beautifully.
Quite beautifully.
So it's about refining entries and just knowing where you're at. But yeah, I hope that helped. I think that was a pretty good example. And the cool thing about it is if you guys go to any chart and you back test, you could find countless countless setups and understand why things the way they do. But I think the most important thing to take out of this video is obviously know your structure, right? Like know what kind of market you're in. But the confluences are key, right? So I think they're so important. It's like the moving average crossover. The moving average is a lagging indicator, so it's going to be moving as price is progressing. So it's not going to it's literally going to show who's in the market. Like at this point in time, if the red's on top, the sellers are in the market. That means look for sells. You know what I mean? Once the market comes up to the upside, buyers in the market, even if it's not for an extended period of time. Moving averages are an amazing tool. So the confluences, the moving average crossover, a break of a counter trend line, and then a break of structure, which could be a prior support or resistance, similar to this here. And then a bearish variation, or it could be a support, like right here. This red candle here was a bearish variation. This is a bearish engulfing. It engulfed this previous support, and it broke below it, which was nice. But like the actual real key here is what happened. Counter trend line broke, came back up, tweezer top, bearish engulfing off the MA, plummeted. Influences are key,
especially on higher time frames because they have more, more power behind them.
Yes, absolutely.
Right. Yeah. So hell yeah, dude. Good breakdown.
Yeah, thank you. Stop.